So the Genius Act creates a regulatory framework for basically anybody to go and start their own stablecoin. But the idea is across the board that if you create a stablecoin is going to be worth $1, it's your responsibility as the stablecoin issuer to maintain that. And so they give you these requirements and these regulations. What are those US dollar assets that you can have that are backing your stablecoin? Well, they're saying it includes things like short-term treasuries. So what I think they're hoping for is that creates an inflow, specifically short-term treasuries, 90-day T-bills, 28-day T-bills. I think they're hoping that a lot of that money for stablecoins will come from, let's say, the risk assets, Bitcoin, altcoins, et cetera, into stablecoins. But the reality is that a lot of that's going to come from the banking system. There's going to be people that are going to take US dollar deposits from the banking system, and they're going to move it into stablecoins. And the reduction in deposits mean that banks are going to have to sell assets to come up with that liquidity. What are bank assets? What do banks own? Well, they own US government bonds. They own the longer term ones, right? They own 10-year, 20-year, 30-year bonds. You're going to see banks having to sell 5-year notes, 10-year treasury notes to create enough liquidity so they can give the depositors back their money, so the depositors can move their money into the stable coins. Then the stable coins will take that same money and they'll go and buy short-term government bonds. So in some respects, it sort of screws the Treasury Department a little bit, because the Treasury Department is now going to have to sell the longest debt it can, be trading that stuff out for 28-day T-bills.